So right now, you've been having a real issue trying to get your house sold. As you know, we now have 4 times as many homes on the market, and we have fewer buyers. And we all know what's causing this. It's the interest rates. They are just killing the average American family right now. And if you're trying to get your home sold right now, you have to start looking at alternate things. And I know you don't want to have another price adjustment. In the last week, 25% of the homes on the market had a price adjustment. And I know you don't want to have that. So stick around. I've got someone great on the line here, Miss Julie Sanchez, and she is going to talk to us about how to get your home sold. If we haven't met, my name is Eric Hudson. I'm a real estate agent here in the Las Vegas area. And if you ever need anything, all of my information is in the info tab. Call, text, email, and someone will get back to you. Also have Miss Julie here. And go ahead and talk about yourself for just a quick second, Julie.
You got it. I'm Julie Sanchez. I am a licensed originator, loan officer, senior mortgage advisor, and business development officer here in Las Vegas and other areas in the States as well. I have been helping families for a while now. I went through the last crash, and we have seen quite a bit since now. And I will say that this is definitely one of the more challenging markets that we've been in quite a while, actually, Eric.
So let's go ahead and no more jibber jabber, and we're going to get into it. So what we have here is this is a house. I'll be honest, we're having an issue selling because of the interest rates. They're killing people right now. And so Julie is going to go into some things that you really need to know to help with that interest rate. And it's going to be much better than taking a price reduction, which is going to leave more money in your pocket. So I'm going to go ahead and shut up and let Julie talk.
Well, thanks, Eric. I appreciate your time today. And I think it's very important for us to let people know out there, especially if you're a buyer, you're a seller, what can be done, because as you mentioned, Eric, prices have also risen, but interest rates have really risen to a point that it has become unaffordable for a lot of buyers right now. So a lot of buyers are sitting on the fence, they're sitting on the sidelines, they're waiting, actually not really knowing what's happening or what's going on. So I want to first and foremost speak to the buyers, let you know that this is real estate. This is a market that is constantly shifting. However, it's not going to always be this way. I still believe in the homeownership American dream. And so when you purchase, remember when you purchase real estate, unlike a car, when you drive it off the lot, it depreciates. Real estate has historically increased its value over time. So buying a home is usually going to be a better bet than maybe just renting or living with family, what have you. Buying a home is always going to have better outcomes for you to build wealth, to help you gain equity overall for the average consumer. So I want to encourage those that are still thinking about buying, they're not sure, it is still a good time to buy. People buy in every type of market. So yes, you're absolutely right. It has become unaffordable for people, Eric. So one of the things that we're doing, and I'm going to speak in 2 different categories, if you will. Let's cover buyers right now, and then we'll cover some things for sellers that sellers can do. So buyers, right now, there is an opportunity in the market. We don't know how long it's going to last. Like Eric said, we have 4 times more homes on the market than we did maybe in 21 and in 2020. We are no longer in that type of market anymore. There was a fire sale, I like to call it. Interest rates were at their all-time historic low. If you didn't get in on that, it's come and gone. There's nothing you can do. We can't go back. We can only go forward. What I will speak to is what you can do right now, and also helping you understand that interest rates are always going to go up and down, up and down, up and down. This is what's happened throughout history. As long as I've been in this market, it's happened. There's plenty of opportunity to refinance. So there's something that is being said out there. I want to say it today because I think it's pretty catchy, but it also makes us go, okay, that's a great way to think about it. So you want to divorce your rent, you want to date the rate, and you want to marry the home, the house. So when you think of those terms, remember that dating the rate is, you're going to do that because it's temporary. The average consumer, when they get into a home and they get into a mortgage, you don't usually keep that mortgage for 30 years, even though you're on a 30-year fixed mortgage. The average is between 7 or more years that you normally keep that. And in some cases, it's a lot less. So I do want to show you a couple of examples on how we're going to help you make your payment more affordable, but let me explain it first. So right now, again, there's an opportunity in the market because there are more homes. Sellers are willing to give a little bit more money away, or some money away, than maybe they normally would, because they've made plans based on what's happened in 2020 and 2021. So we can basically throw those 2 years out, right? 2020 and 2021, right, Eric? Because those were anomalies. Those were not normal years for real estate. Those were, again, the fire sale, homes were flying off the market. There was not enough inventory. We're past that now. We're more in a balanced market. So what has happened is those interest rates have risen so much that it is unaffordable. So a couple things that we can do. Again, there's an opportunity in the market where sellers have made plans, so they need to move their properties. We might be able to ask them for money to help lower the interest rate. So that's the main goal right now, is to figure out the strategies and lower that mortgage interest rate to lower the payment. All right, so I'm going to show you an example here of how you can make your payment more affordable. Now, I know this has a lot of numbers. Just track with me here. I'm just going to show you a couple of things, and I'm going to highlight them for you. So for instance, let's say you're in the price range, maybe you're up to 500,000 on your price point. That's the range that you're shopping in. That's where we're at today. Is the interest rate is about 7.125. Yes, you heard that right. We are in the high sixes, low 7 percentile range right now in the interest rates. And what that has done is it has caused the payments to increase quite a bit for consumers. So to buy a $500,000 home today, in this example, you're putting 5% down. That is a little over a $3,600 a month payment. Let's say that you can handle in the $3,000 range, but you kind of need your payment to be maybe in the $3,300 range. So I'm going to show you something. What you tend to do as a buyer is you want to get a good deal. You're trying to maybe ask the seller to lower their price point. So the second column that I'll show you here is, and I'm going to use a price of $25,000. Maybe you want to ask the seller, hey seller, I like your house, but I want you to lower your price by $25,000, even if it's going to appraise. So let's say that you go to the seller and you say, seller, I want you to have you cut your price to $475 because my interest rate is high. I'm trying to get this payment down, and that does help. It helps you about $172 a month in this example. But I will tell you, Mr. Buyer, this is actually not the best option for you as a buyer. And of course, the seller is going to say, man, I don't want to give up $25,000 when my house is actually worth $500,000. So let me show you a better way. A better way is for you to ask the seller for not 25 grand, but ask them for about 13,800 in this example. And again, this is just this example. Every seller situation is going to be different, and so is the property, whether it appraises or not. So that's where someone like Eric, a very experienced real estate agent, working in tandem and collaborating together with a lending partner, all of this as your team is going to work together in this market to help you get what you need. So you're going to go to Eric and you're going to find out, hey, Eric, is this property worth this price? And then he's going to do some work for you. That's why it's really important to have that real estate agent on your side. So let's look at the better way. And this is what this third column is going to show you. So the better way is to ask the seller for a little bit of money. In this case, in this scenario, it's 13,800. We're going to say, seller, I'm going to give you 500,000 for your home because it's worth that. It's going to appraise at that. But I'm going to use that money to buy down the interest rate so that my payment can come down to about the 3,300 range. Now look, instead of the 172, we're now saving about 314 a month by doing this strategy. This is going to be way better for you as a buyer. Let me show you why. I'm going to scroll down here in these graphs. This first graph is just showing you the monthly payment difference. Okay. But look at this. Your savings over just 5 years is a lot more when you ask the seller to buy down the interest rate, rather than look at this 25 off the price. And then I'll show you what the last column is. Let's ignore that one for now. And also interest paid over time. If you look at this third graph, you're paying quite a bit less in interest as well because your interest rate is lower. So it is a win for you as a buyer to ask the seller to lower your interest rate. And in this market, they might be willing to do that rather than give you $25,000 off their price or whatever that looks like. Some people ask for more. So again, it's not the best. And you would think that it would be, but it's not. So I'm going to show you something that's really cool here. So let's say if you are a buyer and you really need your payment to be in this $3,350 range, and you really need your cash to close to be under this $40,000, you would have to shop in a price point of $455,000 rather than $500,000. So it's like getting $45,000 off a sticker price. You've expanded your search now, which is really huge. So, and that's because at the current market interest rate, that's where that payment is gonna sit at. So using this strategy is huge, and you got to have a good team behind you, a good real estate agent and a good lender to know how to do this well, because we can get into some predatory and high cost lending laws that we do not want to be in. So you have to have a lender that knows how to do this well as a real estate agent. And again, there's different strategies depending on the seller situation and the price of the home. Okay. So Eric, what questions do you think that a buyer might have in this case or in this scenario?
The first question I would have as a buyer is 1% the most I can get down, or can it go further than that?
That is a really great question. That is a question I get asked quite a bit. So the answer is no, it's not the lowest interest rate that you can get. There are different options. Again, every buyer's situation is different. So we need to figure out what is your goal ultimately, and does it make sense to try to lower it even more? Because every time you lower it, it does cost money. And again, it depends on the timing of the market as well. It's impossible to time the market, but let's just say you're a buyer and you're out shopping, and now you have a contract because the seller has accepted your offer. And now we get into contract. What we do as a team is we make sure that we have that conversation with you and show you the different options. And we will use this exact program to show you a side-by-side comparison so that you can make a sound decision for you and your family. So the answer is no, it could go lower. It just depends on, again, how much cash do you have? How long are you going to be in the home? Does it even make sense for you to do that? Keep in mind, we are expecting that interest rates will lower at some point. Now, mind you, they're not going to go back to what they were in 2020 and in 2021. They're not going to go back, but they will lower, because historically, I'll tell you, I did my own tracking from 2016 to current, and the interest rate reduced by at least a half a point or more over 16 times. So it will come down. When, we don't know, we don't have a crystal ball, but we are constantly looking at when those opportunities are. So we have a client for life program. One of the things that we also do is we will not charge those that are paying the underwriting and processing charge. We're not going to charge you the next time you refinance or any other time that you need a mortgage. So heroes and veterans, that gets waived, underwriting and processing, but anybody else, if you pay it one time, it gets waived. So you're going to save money on that refinance if you have to refinance. But the main thing is to make sure that it is affordable for you right now. That's the main thing.
Okay, the next question I think people would have has to do with the amount that the seller is allowed to give. We have three main loan types. You have conventional, VA, and FHA. Can you go over the maximum amount percentage-wise that they're allowed to give?
Yes. So There is a maximum seller contribution. There's a maximum allowed amount that the seller can give you as a buyer. And so it does depend on the program. So for instance, typically for VA, it can be 4%, but it could be a little bit higher on VA as well. So there are some VA guidelines that could allow that. With FHA, it's generally at 6%. And with conventional, it could be 3%, 6%, or 9%, depending on how much you put down. But because this can be very complex, I would say that typically a buyer or even a real estate agent doesn't really want to go by that. Again, you want to talk to the lender, talk to the lending partner, make sure that everything is accounted for, because if you ask for the max, if you get it, there could be some issues down the line if you need certain repairs, and they're going to give you more contributions. So we've got to make sure that that is managed properly. And again, we've done this many times. We know how to do this. We're very experienced with it. So again, speaking to a lender that really knows this is highly important, but that is a great question.
Okay, thank you. So I'm going to put my seller hat on for a second and start go like, okay, this is going to save me more money than lowering my price. Now, right now, what have you, because I know you have a lot of loans coming across your desk. What have you seen lately is about the average price drop?
That's a great question. So I actually heard this, and I haven't confirmed it yet, but I heard that National Association of Realtors has said that the reduction in price average across the nation is about $25,000. So with that being said, which is pretty right on, and because again, in our market here in Las Vegas, I have seen and talked to a lot of real estate agents, and that seems to be the price drop, or even what buyers tend to ask for the seller to drop their price by, 25,000 to 30,000. We're seeing more in those higher price points, maybe over 500,000, like maybe in the 600,000, $7 and million range. They're actually asking for even more of a price drop.
Okay. Now, another one, like, I mean, people all over the country are watching this, so we can be in Kalamazoo, Michigan, and most of this is going to resonate across the board.
Right.
So at this point is we're going to talk a little bit about Nevada, but it should translate to the rest of the country. If the seller wants to do this and try to preserve as much capital as possible, what kind of language needs to be in their MLS remarks?
So that is something that we want to make sure you have the right language. I mean, we want to be as simple as possible, because we want buyers to know out there. Basically, the verbiage is seller willing to contribute to lower buyer's payment, really, because that's the end goal. We don't need to get complicated about it. We just want to make sure that sellers are willing to help the buyer lower that monthly payment, which is usually why the buyer wants you to cut your price. So simple as possible.
Okay, I'll go from the seller to the buyer for just a second. I'm a buyer. I see the interest rates are atrocious. I want to save $300-400. Do I just ask for a certain percentage in my offer, or what should I do? How should I do that?
Another great question. So really, what we do as lending partners is we're going to, for instance, when I work with Eric, I'll call him up, and as a lending partner, we're very involved in this, because we're going to ask Eric, hey, Eric, what is your professional opinion of the value of this home? And again, if he's on the buyer side, he's going to probably have already done some footwork and ask the listing agent some of these questions. We will also call and ask the listing agent some information, like what's the seller situation, what's their motivation. So we want to know all of this. But to answer your question, if there's a certain percentage, I like to stay away from percentages, even though in our mind we might know. And that's because trying to ask for a certain percentage, we want to make sure we ask for the dollar amount. So we're able to go into our system, see where rates are. We want a certain dollar amount and want to make sure we're staying within the maximum contribution allowed. And then we also want to make it as easy as possible for the listing agent. If we're going to give the listing agent a percentage, that's kind of a pain for them. It's better for them to have a dollar amount. So again, we're all collaborating together. We're kind of figuring it out. Every situation is different. So we want to make sure we have all those little details in place to maximize the benefit for the buyer, but also help that seller as well.
Okay. I'm going to take my buyer's hat off and put my seller's hat back on for a second. Now, over the last 2 years, we've had an issue, and it's according to where you were on the fence.
Mhm.
If you were a seller, if Bob sold his house and got 30,000 over list, you don't want 30,000 over list. You want to list your house for 30,000 plus, and then you want another 30. And a lot of the price reductions we've been having lately are those folks. Now, one of the things you talked about is you have to make sure that the house actually appraises. So when you're offering these out, would it be advisable for you to go with your real estate professional and find out what current appraisals are coming in at, instead of going with the emotional, this is what I want?
Exactly. So as I mentioned before, we just really honestly, if we're being honest here and we're being real about wanting to sell your home, we really have to throw out 2020 and 2021. Those were not normal years. Those were an anomaly. Those numbers they're not real. They were artificially created, and it was a supply and demand situation. And so with that being said, sellers do have to be realistic, and they do need to rely on the experience of their listing agent when they are listing their properties, because you're not going to be able to get 30,000 more, 10,000 more, 5,000 more likely, depending on the property. So we're just in a more of a normalized market now when it comes to price points and so forth. So we're seeing a lot of adjustments in the prices, but a lot of it has to do with the sellers being a little bit unrealistic. So I think if the seller really wants to sell their property, the mind shift has to be a little bit different and shift to, you know what, this is where we're in the market. It's not that the buyers that are seeing your home or, hitting a heart on your home or walking through your home, and you don't have any offers, or it's sitting there longer than you want. It's not because they don't like your house. It's because they can't afford it because of these interest rates that have risen so high. And so it's sticker shock for them. It's hard to swallow. So they're trying to make it more affordable. They want to buy a house. They probably really like your house. So I think if buyers and sellers can work together, they can actually come up with this solution if you have the right team behind you to sell your house. So it's a matter of giving up a little bit, but not much, and also listening to your real estate agent to know what your home is really going to appraise for, because this whole strategy does not work if we have a home that is overpriced, because when it comes down to it and we get the appraisal is going to dictate how we can move forward in that transaction. So Eric, we all know what happens when a seller overprices their home. They get into contract and the appraisal comes in lower and they've given a seller contribution. What usually happens to that contribution?
Well, if it comes in lower, the first thing the seller is going to do is go, well, I want to take away that contribution.
Exactly. So now that strategy is not going to work anymore, which then defeats the purpose of doing this and trying to help the buyer lower the payments. So we want to make sure we go into it knowing all the details, knowing a little bit more about the seller and the seller situation, and making sure that we have that in place so everybody wins, buyer and seller.
Okay, good. Now, on this next one, I'm going to go a little bit down the middle there.
Mhm.
And everyone knows that the prices have come down. The height of the market, we were at 482,000, and we're now at 450 for the median price. And that's for a single family home. And actually, last month, the price for condos and townhomes actually went up.
Mm.
Now, I have actually been arguing that prices have continued to go up. but it's in a stealth way. The actual price of a home may have come down, but the issue is because of interest rates, they've continued to go up
Yes.
because the payments have continued to go up. So it's a miracle that the median price has only gone down 32,000, and we've stabilized for 2 straight months. Do you have any insight, just even a thought, of why we were actually able to maintain the value that we have with these interest rates?
So, I mean, it started in 2020. I do have a lot of thoughts. I have a lot to say, but in 2020, it was a supply and demand challenge. And so we had 2 things happening. We had a shortage of homes on the market, and the demand was super high. And we had a fire sale on the interest rates, 2 and 3%. Okay, back prior to 2016, we had interest rates that were all-time historic lows, and they were in the 3s and 4s. I honestly never thought we would get below that, but we did. So you couple, it was like a perfect storm, Eric. You couple all of that together and boom, anytime you have supply, supply and demand, short supply, high demand, that's going to dictate price, right? So yes, people paid more for houses. They were paying 5,000, 10,000, 20,000, 90,000, 100,000 over for homes because they could and because they could sell. So that was a great time for sellers as well. Again, anomaly, not normal, phenomenon, okay? So when something like that happens in real estate, typically we're going to get to a market like now where there will be a correction, but what we need to understand is a correction does not mean depreciation. So we need to understand the difference between appreciation, depreciation, and deceleration. So appreciation, we know, is when the values go up, right? Depreciation is when values go down. You see the actual value. We're not talking about price, we're talking about value. Now, deceleration is what we're seeing right now, which is also known as maybe correction, where prices, the pace of the homes have pace of the homes have slowed, and now that's resulting in a correction. So sellers that, like, let's say we have a home that's worth $500,000, okay? And the seller thought, I'm going to list it for 550. Well, they're 50,000 inflated, right? They're too much. They're not going to get that. They're overpriced. So because you see that price come down, that's a deceleration in price. That's a correction. It's not depreciation, because the big government sponsored entities out there like Fannie Mae, Freddie Mac, and even companies like Realtor.com, they're all forecasting a 2, 3, 4, 5% appreciation over the next few years. You can't have appreciation and depreciation as well. So I will take all day long a 0.5 point appreciation over depreciation. I will take 1%. I don't care if it's 2%, 3%, 5%. As long as it's something appreciating, I will take that all day long. And so I think that's really important for consumers and homeowners alike to understand that difference between, again, appreciation, depreciation, and deceleration.
Okay. Now, the next one's going to go to the Fed Chair, Jerome Powell. I believe this morning he said that he is expecting for the housing market to have a fairly hard landing because of the changes in interest rates. So from everything that you've seen, and maybe from reading from MBA Mortgage Bankers Association, what are they saying the next trend is going to be in interest rates? Do you think they're going to go up a little bit more before they possibly go down?
Actually, I do, unfortunately. So everything that we follow within the economic sector that involves, and affects real estate and mortgage, here's the thing. Right now, inflation is the enemy of interest rates, mortgage interest rates, okay? So just a little 101, not to get too complicated, but remember that mortgage interest rates are directed or propelled by mortgage-backed securities. So mortgage-backed securities, just like stocks, are traded. Mortgage-backed securities are a bond. They're in the safe haven. So when the Fed says, hey, we're going to raise interest rates because they're trying to tame and get inflation under control. They want to stop spending, consumer spending, or they want to slow it way down. And by doing that, they raise interest rates. When they say we're going to raise the interest rates by 3/4 of a point, they're actually talking about the Fed funds rate, the rate at which banks lend to each other for those short-term and variable rates like credit cards, auto loans, installment loans, all of that. So they can actually say, yeah, we're going to raise that by 3/4 of a point. They're not directly correlated, but they are indirectly. So when we know what the Fed is doing on that side, we know it will affect bonds. So with that being said, the chairman has also said they're going to continue, and here's what I don't like about what he says, they're going to continue to raise rates, which, okay, that's fine, but they're going to do it at whatever cost to the American public, to the economy, to anything. So what I would say is be prepared, save your money. If you're renting right now and you want to buy, keep wanting to buy, keep preparing to buy. And if you want to buy right now, you can still buy if it makes sense for your payment. If you can afford that payment, you can buy, because you're still going to gain equity. You're still going to do well with your property. We don't know. We don't have a crystal ball though. Anything can happen in real estate, but I'll tell you, it's not like it was back in 2008. It's not the same thing at all. And you can read more about that. We can go into that detail, but we'll be here for a minute. I actually forgot what your question was, but I'm very passionate about helping people understand really what's happening and why you don't have to be afraid of buying right now. So
Okay.
if you want to buy, absolutely buy.
Okay. Now we're going to have to go into pure speculation and opinion. OPEC and cutting production and the effects upon inflation and possibly causing even more rate hikes.
Mhm.
What's your opinion on that?
So, okay, that was your question. So the rate hikes are likely it's probably going to get worse before it gets better, honestly. And that is because until inflation is under control, we're going to continue to see interest rates being high. So when inflation comes down, that's when we're going to see interest rates come down. I don't know when they're going to tame that. Here's the thing about real estate though. Real estate is one of those interesting vehicles because it covers your basic, human need of housing, right? So you're either going to rent or you're going to buy, but it also allows you to increase your value and gain equity and build a little bit of wealth as a consumer. So it's one of those interesting things that you've got to look at it a little bit differently. You've got to look at your home as, I've got to live somewhere, I've got to pay for that, unless you have a family member that's just going to allow you to live with them and pay, and then who really likes that that environment anyways. But you're either going to pay rent or you're going to pay your own mortgage, where you're actually paying into your principal, you're gaining equity, and then over time your home is appreciating. So and I perfectly honestly agree that not everybody should be homeowners. Homeownership is not for everyone, but if you are the one that wants to own, then I say go for it, because couple things about owning a home, it is your hedge against inflation. Okay, let me say that again. It is your hedge against inflation. So when everything else is going up, your mortgage, if it's a fixed rate and a fixed payment, it's not going to change. How many of you have had as renters, your payment has gone up? I've talked to, probably hundreds now of families that have called me and said, I think I need to look at buying because my rent went up $200, $300, $500, $1,000 a month. Or my landlord is going to sell the house and I got to get out. He's given me 30 days, or I got to get out by December. So nobody can tell you to move. Nobody can tell you to leave. And one of the things too that government does as well is they want to protect real estate. They will do whatever they can to protect real estate. We just saw it in the pandemic. What did they do for homeowners? They did forbearance. They allowed forbearance. They allowed homeowners to stay in their home, skip mortgage payments, and it not affect the credit. Now there's different ways to repay that, but they always will come up with programs because they want to protect the real estate market. Okay. And we got to think of real estate as any other vehicle. It ebbs and flows. It just doesn't ebb and flow, as volatile as maybe other vehicles of investments. So really, really great things to think about when you want to buy. Again, main thing, let's make sure it's affordable. Make sure you can make that payment, but that's not going to be your payment forever.
Okay. So now, a few minutes ago, you said if you were to talk about 2008 and now, it will take a minute. I'm going to challenge you.
Okay.
5 minutes or less. Tell us the difference between 2008 and now, because we have a lot of people who are going gloom and doom. The market's about to crash. Everyone's going to be homeless. Dogs and cats are going to be sleeping with each other. So you got 5 minutes.
All right. So just in a nutshell, it really it comes down to lending. So back in 2008, if you breathed, if you were a person with a Social Security and of age, you could get a mortgage. Well, after 2008, Dodd-Frank came in, lots of other regulatory agencies came in, changed the game, and now you no longer can just get a loan because you want a loan. It takes a lot to get a loan now. There are criteria now, much more firm than ever. So you got to have all the minimum FICO scores. You got to have money, skin in the game. No longer can you get 100% financing unless you're a veteran. And even if that, you've got to have money for your closing costs. So it is a much different game than it was then. Then the market crashed because of the mortgage loans. It crashed because there were subprime type of mortgages that were being sold as A paper. So it was scammy going on. There was scams going on then, and it's not like that these days. It's highly regulatory environment, and ask any homeowner what it took. We try to make it as easy as possible, but it does take a lot, everything but your blood type, to get a loan for a mortgage. So that's in a nutshell the difference there. There's a number of other reasons, but those are the main things. Lending is very strict now.
Okay. So you said it was going to take forever. It took you 1 minute and 15 seconds.
Okay, good. Well, I thought we could rabbit trail off in that, and that would take more time. But
Okay. And I'm going to end this one on forbearance. Now, the government tried to protect housing, came up with forbearance. What have you been seeing as forbearances ending? Are people being able to make those payments? Or are they even going like, my goodness, I have a 3% loan. I'm never going to let this go. So what's going on with forbearance?
So what I've heard about forbearance, and I'll tell you with forbearance, I mean, that's on the servicing side, we're on the originating side, but I haven't heard too much about forbearance these days, but I know that they're coming due. A lot of what happened with the servicers, and the servicers are the ones that you make your payment to. So when I say servicers, we might be a lender, we don't service the loan, so we're going to sell the loan to a servicer, and they're going to be the ones that accept your payment. So the servicers are the ones that handle the forbearance. And so when you run into a situation where the homeowners, like let's say 2020, 2021, they needed forbearance, they just contacted the servicer and they talked through that. So a lot of that loans or that amount was added to their loan. Some of it was due. And again, it depended on the servicer and what they allowed, and also the homeowner situation. So I will speak to also, a lot of people think that there's going to be a lot of foreclosures coming up because people can't make their payments or what have you, and my personal opinion is I just don't see that happening, because there's, that I don't have the number, but it's over 14, probably now 15, even $16 trillion in equity that people have across the nation. I mean, people can sell their home, even if they get less for their home, they're still going to make money on their home. So they're likely they can sell it, walk away with a chunk of money, and just go rent or live with family or do something. So I just don't see that. And foreclosures are probably even 2 years out, even so. So, I mean, we're not going to likely see a lot that people are thinking. And again, it could get worse than it could before it gets better. So I would just say, make sure it's affordable. Make sure that you are saving, keeping your money, doing the right things, and you'll be okay. But yes, there could get worse before it gets better. I hate to say that, but I think that could be the case.
Okay. Well, do you have any parting shots? Something you would like to talk about? Issues you'd like to bring up?
Just I want to encourage, listeners out there, whether you're a buyer or a seller, just, this is a temporary part in our market. It does stink what's happening, with, I'm not going to get political or anything. I just know that, our current environment does need to get better, and eventually it will. We might have to go through the mud for a little bit. We just need to be smart about our money. And if you're a homeowner, there are things, if you run into a situation, again, the government's going to do what they can. There's always programs that they offer when hardship comes about. So I encourage you, if you are having a hardship or you think you might, just know that all you have to do is contact your servicer and say, hey, this is what's going on. What are my options? And then those of you that are homeowner or want to buy a home, want to be a homeowner, I just want to encourage you too, because homeownership, again, is still the American dream. It still makes sense. And if you can afford the payment right now, don't be afraid to get in the game. Get in the game, because you will end up winning. Nobody's going to tell you to move. Nobody's going to increase your rent. And there will be an opportunity. I will say, I know there will be an opportunity. I just don't know when, to refinance and to lower your rate. And if you can get a seller to help you lower that rate now to make it as affordable as possible, there are options out there. You just need to talk to your experts like Eric, like me. We'll be happy to I've been having a lot of just conversations to help people prepare. And we're open to that, and we want to help. So, reach out.
Okay. Well, don't want to keep you here forever, because the questions I have, we can go for another 2 hours. And I know, I'm sure you would like, let me redo this.
Okay.
So I could have you here for another 2 hours, and maybe one day we can go ahead and do this again and go into some deeper subjects and things that are interesting to folks, if you're agreeable to that.
I'd love it.
Okay, great. Well, again, my name is Eric Hudson. I'm a real estate agent here in Las Vegas. All my information is in the info tab. Julie's information we're going to put below if you want to ever reach out to her. And if you ever need anything, like I said, go ahead and reach out. And if you have not subscribed, you see that red subscribe button there and it's not gray, go ahead and hit that sucker, hit the thumbs up, and of course leave us a comment, because that's how the YouTube algorithm works.